The Bitcoin halving is getting closer and closer, but what will the impact be on the Bitcoin price this cycle, and what does it mean for Bitcoin long term? Well, in today's video, I'm going to go through what the halving actually means, look at how the halving historically has affected Bitcoin price movements, and also spot a key major trend that I am seeing in the market that could line up next year towards the month of April that could result in the beginning of a new crypto bull run that could take Bitcoin to new heights. So without further ado, let's get straight into the video. Now, before we kick off with all that fun stuff and talk about the catalyst for a potential Bitcoin run and exactly what the halving could mean for the Bitcoin price, I want to talk about what the halving actually is for a second. Because if you don't know what the halving is, then I believe you must understand it first to be able to quantify the impact on Bitcoin supply and also demand. So it all stems from the basics of Bitcoin mining, which is a process in which people can mine or mint new Bitcoin via utilizing hardware to participate in Bitcoin's blockchain network as a transaction processor or validator. This is because Bitcoin operates under a system called POW or proof of work, which is essentially where solving an encrypted hash takes time and energy, which acts as the proof that the work, aka the mining, was done. Mining is the main intent behind the blockchain network and consensus mechanism, and the reward of Bitcoin, which is the issuance of Bitcoin to miners as a reward for them doing work, acts as an incentive to participate in securing the blockchain. So basically, it incentivizes people to keep the network more secure and more decentralized. So knowing now what proof of work does, what is the Bitcoin halving? Well, after the network mines 210,000 blocks, and this happens roughly every 4 years, the block reward given to Bitcoin miners for processing transactions is cut in half. And therein lies the saying, the Bitcoin halving. This event is called the halving because it cuts the rate at which new Bitcoins are released into circulation in half. Now, this reward system will continue until about 2140. So that is when the last of the 21 million Bitcoins said to be in existence will officially be mined. And at that point, miners will be rewarded with fees for processing transactions, and we are already seeing in some cases the fees from usage on the Bitcoin network, especially during the BRC20 and ordinals hype, at times actually outpace the amount of revenue generated via mining Bitcoin itself, which is interesting. So the whole sustainability discussion for Bitcoin, which we won't get in too much in today's video, is basically how does Bitcoin become sustainable with emissions halving? Are people still going to be incentivized to run validator nodes to power the network if they aren't necessarily receiving as many rewards? And the counter logic to that is, look, as the Bitcoin network is more used, more fees should be generated, so that should subsidize some of the rewards that are now missing from a halving of the Bitcoin issuance. So that's an interesting debate on the sustainability of Bitcoin long term. But back to the halving, it's pretty significant because every single 4 years, we do get this halving of supply, and that essentially marks every 4 years Bitcoin getting closer and closer to its 21 million cap, or its finite supply cap. In 2009, the reward for each block in the chain was 50 Bitcoins. As of April 2023, which is the current halving cycle, about 19.3 million Bitcoins were in circulation, leaving just around 1.68 million left to be mined. On the screen in front of you, you can see the halvings that have actually taken place. So we had the 2009 Genesis block, and the block reward at the time, so the amount of Bitcoin released per block was 50. In 2012, it cut to 25. 2016, it cut to 12.5. 2020, which triggered the last big Bitcoin bull cycle, the issuance of Bitcoin was cut to 6.25 per block. And soon, next year, in around 300 days, and this is an approximate date because it depends on the speed of the network as to when exactly we get the halving, but let's say roughly in April 2024, the block reward will halve to 3.125. So you can see that exemplified in front of you. And you can also see exemplified just how Bitcoin supply actually works. So you can see this yellow line is the subsidy of Bitcoins. So this is the remaining Bitcoin that is yet to be mined. As you can see, we're sitting just under 2 million. And the right axis, which is this black line, you can see the total supply of Bitcoin, which you can see over time starts to hit a saturation point as every single time we get a halving, which eventually brings us in line with this 21 million supply level, which is Bitcoin's hard cap. So the reason why the halving event is so significant is because just think about it. Bitcoin's inflation rate was 50% back in 2011. So every single year, 50% based on the circulating supply at that time was actually being released into the market. After the halving in 2012, it plummeted to 12% in 2012 and 4.5% in 2016. Now, based on the current level, Bitcoin's inflation rate is 1.77%. That is actually roughly less than the gold inflation rate. So after the next halving, it's going to be even lower, and we're going to see a sub 1% inflation rate for Bitcoin, roughly around the 0.9% mark, which means there is less than 0.9% of the supply actually hitting the market each year. That's going to be less than the amount of supply hitting the gold market, just to give you an example there. But this is what's really interesting about the halving. It doesn't just have supply side factors, it also has demand side factors. So after each halving, the value of Bitcoin increases because as you have the supply decreasing, the price actually rises. And due to psychology of markets, when the price increases, demand also tends to increase. Now that might sound counterintuitive, but what you see is these hype cycles, these big Bitcoin bull runs, where you see supply side factors, so aka the halving, affecting the price of Bitcoin, and then that becomes a self-fulfilling prophecy for people actually to buy into Bitcoin, speculate on Bitcoin, causing demand to rise, and as price gets higher, eventually you have more retail participants entering the market. It gives Bitcoin a marketing push, etc., and you end up seeing these crazy spikes and eventually, huge blow off tops. That is basically what has happened in the halving in 2013, in 2017, in 2021, and is anticipated to happen again in 2025. We're going to get into the targets for the 2025 cycle in the second half of this video and look at what the timelines are. But it's very, very interesting how things actually play out. So before we get into the historical price performance and the projected price performance of Bitcoin based on the halving cycles, I want to quickly run you through one of our show sponsors who are actually a Bitcoin mining company. So if you are interested in Bitcoin mining, and I understand that it doesn't appeal to everyone, but if it's something that you have wanted to do, but you simply don't want to run your own rig at home, because I understand that's expensive and, involves a lot of hassle, then what these guys are actually doing is launching NFTs to enable you to earn mining profits. So they have all the miners, 200 ASIC rigs set up in their warehouse, and the NFT gives you access to a percentage of the profits generated from those miners in the form of wrapped Bitcoin. As you can see in front of you, the NFT holders essentially get paid out in wrapped Bitcoin as it's mined, and that gives you a way to earn mining profits without actually having to own a miner. So if that's something you are interested in, there's a link in the description to Bluewheel Mining. On July 15th, they will have their NFT sale, which is going to sell off the first batch of NFTs for these first 200 miners. So if you want exposure mining, check them out using the link in the description. Actually, on Binance right now, you can look at one of their active pools and you can see their current income based on their current miners and today's estimated income over time. And you can also see the statistics here behind the amount of active workers and inactive workers, etc. So, and also the hash rate. So that's very interesting if you want to check that out. So link in the description to Bluewheel. Thanks to them for sponsoring the show. I think it's a great alternative for those that want to mine Bitcoin, but previously haven't wanted to due to the obvious constraints that comes with owning physical miners. It's definitely an interesting play to get exposure to the crypto market, aside from just buying crypto. Now, let's get into some of the price impacts here. So we talked a little bit about supply and demand. 𝗕𝗏𝗄𝗧 does touch on this in one of his tweets as well. He said, people surprised by the ETH plus BTC squeeze, wait until you see what happens in 2024. Simple clarity. Only two tokens have crossed the chasm of being a crypto store of value, Bitcoin and ETH. Two, ETH supply has run out and Bitcoins is shrinking to under 1% soon. There aren't enough coins. So his thesis here is, over time, demand for Bitcoin and Ethereum is increasing. With Ethereum switching to proof of stake, there is now less issuance, and at times it's actually been a deflationary asset. And with the Bitcoin halvings continuing to take place, Bitcoin issuance is also shrinking, and we're going to see that 1% despite the amount of buyers, new entrants into the market continuing to increase. We've actually seen the amount of Bitcoin holders holding over one coin, so a whole coin or more, is in the millions now. So that is pretty crazy. There is a lot of people that just refuse to sell and will continue to refuse to sell because they believe in Bitcoin, and obviously turbulence in the real financial worlds, the banking sector, etc. I think only bolsters the case of Bitcoin as a store of value / digital gold. So eventually these halvings are going to have, and they have had historically, a tangible effect on price. So let's look at historically how it has looked in terms of the halvings, and we'll talk through some price targets, and then I'll give you my take at the end. So we can see here in 2013 we had the first halving. The first line here is the actual halving taking place, and and then this period after, this orange period, is your expansion period and then your bear market period. So this is an entire Bitcoin cycle, and then you have these blue dots here representing Bitcoin all-time highs on the date that they made their highs. So you can see we have a Bitcoin halving, then it pumps later in the year. Then we saw also a second pump in 2013. In 2017, we had the Bitcoin halving. Then we saw a run-up post-halving as well. We saw, multiple peaks, drawdowns, but we ended up making a high in the beginning of 2018. Towards the end of 2017 was that final leg for Bitcoin. Then in 2021, we see that run-up at the start of the year post-halving as well. Often this happens 6 months to a year after the halving. Like we know we had the halving in March, and then we didn't actually see the major run-up until the following year. Then we had a dip into June, July, then that final pump in November for new Bitcoin all-time highs before the next bear market. So these are kind of your 3 cycles mapped out in front of you. Now you can see here, this gray line, this is the next halving. So projected to kick in around March to April 2024. Could be delayed. Let's just see how the Bitcoin network progresses. But as it stands, lining up to be roughly April, which would mean if you follow previous cycles that you'll see a Bitcoin peak towards the end of 2024 and into 2025. As we typically know what happens with Bitcoin is we get, sure, a bit of momentum building into the halving. You can see here in this white period into 2017, we built up into the halving. You can even see here, we started to build up, then we had our drawdown, which was the pandemic, then we had another slight build up into the halving, and then the huge pump. So what you may see is a little bit of positive price action pre-halving, and then your bigger leg post-halving, which is what has happened historically, if you're basing your thesis on the previous cycles. And I'll get into whether my thesis is based on the previous cycles in a few minutes here. We can also see this graphic here, which is the Bitcoin halving price index, which shows you how the cycles compare at the start of each different halving. So we can see the blue line is 2016, the orange line is 2020, and the red line is 2012. These are the start of each halvings, and you can see where we currently sit based on previous cycles. And I think, what's quite funny is, although, I've been skeptical of the halving and other people have been skeptical of, whether we're following a halving cycle, from a price action perspective, we haven't behaved too differently. In fact, we've behaved very similarly from other cycles. Like the last 3 cycles, we've had these pumps within a similar duration post-halving. Then we've seen these secondary legs happen within a similar duration post-halving. Then we've seen drawdowns, which are not only similar in severity, but similar in length. And then we've seen also recoveries or rallies similar in length and similar in severity. Obviously, the 2016 run having a much bigger pump before it ended up retracing quite heavily in March. So we have seen similarities between each cycle, and if we kind of want to place where we are currently sitting based on other cycles, well, we're roughly 3/4 of the way there. If we just, look at this in quadrants, look at this in quarters, and assume this is your next halving, then we're 3/4 of the way there through the bear market heading in to the next cycle. If you want to base it on previous cycles, we are looking quite similar. You can also compare here Bitcoin drawdowns. We can see the drawdowns from the highs are also looking quite similar. So you have this white line, which is our current cycle. You have this red line, which is 2017, blue line 2013. You can see we hit our low in November and then have pumped since. We hit a low around similar points post highs in the other cycles as well. You see, they hit their lows and then they rallied quite significantly ahead of their respective halvings. And we are currently a quarter away from our respective halving if you are kind of looking at this cycle. So looking very similar if this is where we currently sit compared to the other halvings. It'll be very interesting to see whether that plays out again. And you can also see this is another example of the halving cycles, something to take into account. And I think this will only become more prevalent in the future is the nature of diminishing returns here. First cycle, you have your 370x's on Bitcoin, then your 80x's, then your 19x's. And this cycle, although we have had a pivot of this green lines, which is the CVD indicator, and that has resulted in 100% pump off the lows. Next cycle, I don't think we can expect 370 or 80x gains again, or even really 20x would be outrageous. I think the law of diminishing returns kicks in as more market participants enter. That's not to say there's not any growth left in Bitcoin or crypto. I think there's massive growth in this space, but obviously it'll be less than some of these older cycles. That's, I think, something that's becoming quite apparent now. So now let's consider what all this means for this cycle. So I am skeptical of using the halving as a sole basis for an investment thesis, because although this data is super compelling and we're lining up with other cycles, the fact is this is only a sample size of 3. Now, if you're a scientist, for example, and you are conducting an experiment to try and work out the efficacy of a new drug on patients, would you test it with 3 patients and if they're okay, approve the drug? Probably not. You probably want to test it on hundreds or thousands of people and actually get, a large enough sample size to make an assertion and actually, prove your theory. The problem here is proving a theory after a sample size of really 2 and then adding a third in and saying, oh, well, 3 times lucky, that means this time must be a charm. Well, I don't think that's necessarily enough to convince me that, the halving cycle will necessarily follow one-for-one previous cycles. But it's the only data we have, so you have to take that into account. And secondarily, the supply and the demand dynamics that we discussed in the beginning of the video haven't changed. There is still a mathematical reason for why Bitcoin, all things considered, should theoretically go up in price around the halving period, at least post-halving. There is fundamental mathematics behind that. Now, the Bitcoin environment is very different from previous environments. These previous 2 cycles was a period of quantitative easing. Now we're in a period of quantitative tightening. So these are very different macro environments to what we've seen in previous years heading into this cycle. So does that invalidate the logic of the cycle? Well, I don't think it fully does, but I think there's one big catalyst which we have to factor in here, which is actually lining up pretty much exactly with the Bitcoin halving, and that is, of course, the BlackRock / possibility of a Bitcoin spot ETF, because we know BlackRock filed via their iShares Bitcoin Trust, but off the back of that, we've seen a flurry of other applications for Bitcoin spot ETFs. We did see ARK Invest actually front-run BlackRock and then recently amend their application in the hopes of bolstering their chances for approval. We've seen WisdomTree, Invesco, Bitwise, Valkyrie all file for spot ETFs. These are big multi-trillion, multi-billion dollar fund managers that manage capital worldwide, but are very prevalent in the US, that are now filing for a spot Bitcoin ETF. And I feel like the SEC is now feeling some pressure because of the crypto crackdown to chuck the crypto industry a bone ahead of the elections, and doing it through Bitcoin, something that we already know Gensler has called a commodity, just makes logical sense. Now, if we look at the impact on gold 5 years post the gold spot ETF was approved, gold did a 5x in price, because essentially what happens is you have an environment where now institutions can now get into this product much easier, but also retail, like super funds, elderly people that have had barriers to entry with gold, buying physical gold, or have barriers to entry with Bitcoin, getting them to an exchange, having a ledger, can now actually just buy it through the stock exchange, which is, I think, a huge boost to the potential demand for Bitcoin and could bring a lot of players into the market. Now, the reason I'm bringing this up in the context of a halving video is because if we look at the timeline here, the final date for the SEC to approve BlackRock is at the end of February. So it's very interesting that we have this halving projected to be between March and April, but we also have one of the biggest potential demand side factors for Bitcoin, or one of the potential next cycle catalysts, kicking in within a 2-month period of the halving. Now, if we look at the actual timeline here, we could see approval even sooner than February 2024, because ARK, they actually applied for a Bitcoin spot ETF before BlackRock, and they've recently amended their application. Now, if you look in front of you, the top line here shows ARK's path to getting a potential Bitcoin ETF approval, and we can see that if the SEC takes their maximum amount of delays, so a 45-day extension, a 90-day extension, a 60-day extension, then they can push it back to a final deadline on the 10th of January 2024, and that would be where they need to make their ultimate decision. Do we see approval before then? It is possible, or rejection before then, it is possible, but the SEC, they are prone to dragging these things out, so that is your final approval date in January. And then if we look at BlackRock, we can see that their final approval date is at the end of February, and we can see that also iShares might potentially be pushed back 45 days, 90 days, 60 days to that final approval. Now, I just think if the SEC is going to approve BlackRock, they're going to have to approve other players that are filing for Bitcoin spot ETFs that are using similar structure from a regulatory and a compliance perspective. So it's hard to imagine a world where ARK just gets, shut down, Valkyrie just gets shut down, and they just let BlackRock do what they want, if all these companies are using the exact same structure in their document submissions. Now, the chances of BlackRock getting an ETF, well, in the past, they have never basically not been approved for an ETF. They only have one failure, so one rejection in 576 applications for ETFs. So the fact that they're applying here obviously means they are confident that they can actually get approval. However, the SEC is still to date a 33-0 record in terms of denying Bitcoin spot filing. So a lot still needs to play out here. However, I am quietly confident, or loudly, because I guess I'm on YouTube, confident that BlackRock's going to get approval here. I just see the odds, given BlackRock's track record, given its size as a $10 trillion asset manager, in a very good position to get one. And if they get one, then all of these other guys that have applied also are in really strong positions to get one as well. And of course, that does line up with your Bitcoin halving. So look, the halving in isolation may not be enough of a catalyst, but if it isn't, then this potential spot ETF approval lining up within the same couple months could be enough of your next cycle catalyst to counteract some of the detrimental effects of worsening liquidity conditions, for example, quantitative tightening. Although it's important to note that Bitcoin is still relatively responsive to global liquidity, but even in spite of that, we know how massive an ETF would be for Bitcoin inflows, and we know how good the halving is for supply and demand side factors. So needless to say, we could be heading into the final stretch here, the final 300 days before we can look forward to next cycle. And if that is the case, then obviously over these next 6 months, that is kind of your time zone to, if you're not already, really get serious about accumulating and starting to prep for next cycle. Now, things could be delayed, things might not happen all at once, but we kind of do have the rough time frame here, and it all seems to be lining up with the previous cycles and also the spot ETF approval. So if you do want to trade any crypto, commodities, or Forex, you can do so on Prime XBT using the description below. We actually have a $7,000 deposit bonus for those who want to sign up for a new account. As you can see, here's the interface. It's a great interface to trade on. You've got Bitcoin USD, you can trade, you can buy it, you can sell it, you can use margin if you want to do that, whatever you want. And also under the rewards tab, not only do we have a $7,000 bonus, but you can actually complete these additional bonuses to earn another $600 just for example, reaching a minimum of $1,000 in volume, depositing $100, inviting 3 friends. All these things can get you additional bonuses on Prime XBT. So link in the description for that to claim your sign up bonus using the code MILES. I do think it's a great place to trade Bitcoin if you would like to. I hope you guys enjoyed this video. I hope it gives you some perspective, a little bit of a macro perspective, because I feel like, a lot of the time as creators, we talk about what's happening now in the short term, in the next week, in the next few days, but sometimes it's important to look back, step back, and look at the bigger picture for some of the macro catalysts, and obviously it doesn't really get bigger as a catalyst than the halving for Bitcoin. So hope you enjoyed. Smash the like button if you did, and I will see you in the next video. Hope you have a lovely day. Peace out.